On a crisp February morning in 2026, Washington, D.C. was jolted by a dramatic move from the Oval Office. The city, already accustomed to political surprises, found itself at the center of a sweeping policy shift that would ripple across the nation's most powerful industries. President Donald Trump signed an executive order imposing strict financial rules on America's top defense contractors, sending shockwaves through both Wall Street and the defense sector. The order freezes their ability to issue dividends or buy back stock, two major ways companies reward investors and boost share prices. For many, these financial maneuvers have been a cornerstone of their corporate strategy for decades. These restrictions are conditional. Only companies that prove they consistently deliver superior products, on time and on budget, can resume these financial activities. The message is clear. Performance and accountability now come before profit. This ties corporate financial strategy directly to operational performance in a way never seen before, forcing executives to rethink how they measure success and reward shareholders. The move follows years of frustration over project delays and cost overruns in high-profile military programs, where billions have been spent with little to show for it. The government's patience has finally run out. The administration's message is clear: change your priorities or lose access to billions in taxpayer dollars. The stakes have never been higher for those who depend on government contracts. For defense contractors, this is a fundamental challenge to their business models, demanding a new focus on efficiency, transparency, and results. For investors, it raises questions about the future value of their holdings and whether traditional returns can be expected in this new era of oversight. For the Pentagon, it marks a new era of enforcement and accountability, with the promise of better equipment and more reliable partners. The rules of the game for the American defense industry have been profoundly, and perhaps permanently, altered, ushering in a period of uncertainty, adaptation, and potentially transformation. President Trump's executive order rests on two major pillars: a conditional ban on shareholder payouts and a strict cap on executive compensation, both designed to reshape the defense industry's financial priorities. Defense giants like Lockheed Martin and RTX are now prohibited from paying dividends or buying back stock unless they can convincingly demonstrate operational excellence to the government's satisfaction. The order demands clear, verifiable evidence of delivering superior products, on time and on budget, before any financial rewards can flow to shareholders, raising the bar for what qualifies as success. This means companies must not only meet but exceed government expectations, with rigorous oversight ensuring compliance at every step. The second pillar is equally dramatic. CEO pay is now capped at $5 million. A sharp reduction from industry norms that often exceed $19 million or more. The administration argues this move will curb excessive executive enrichment, redirecting resources away from personal gain and toward innovation and workforce development. By restricting both shareholder returns and executive pay, the order aims to force companies to reinvest in research and development, employee training, and modernization of their operations. The hope is that these investments will strengthen America's defense capabilities for the long term, rather than just boosting quarterly profits. The message is clear: focus on building long-term capability and resilience, not chasing short-term stock performance or executive bonuses. While the mechanism for evaluation remains unclear, the intent behind the order is unmistakable and signals a new era of accountability. The administration is betting that these bold constraints will fundamentally shift corporate behavior, driving a culture of responsibility and sustainable growth across the defense sector. The White House's message is blunt: defense contractors must put the military's needs above shareholder profits. Delays and overruns in critical programs have left service members waiting for vital equipment, while billions flowed to investors and executives. The administration sees this as a misalignment of priorities, and the new order is designed to fix it. Companies benefiting from government contracts have a unique responsibility to deliver. The policy is framed as a matter of national security, ensuring industrial might serves the nation's defenders first. By limiting payouts and bonuses, the administration hopes to drive reinvestment and innovation. The goal funnel capital back into manufacturing, research, and supply chains. It's a top-down push to make operational reform non-negotiable. Wall Street's reaction was swift and negative. Investors used to steady returns from defense stocks now face uncertainty as dividends and buybacks are frozen. Many may exit the sector, seeking more predictable returns elsewhere, potentially driving down stock prices. Some experts argue the real issue isn't a lack of cash for investment, but unpredictable Pentagon orders. The order, they warn, could harm financial health without solving production bottlenecks. There's also fear of a dangerous precedent. If the government can dictate financial policy here, what's next? Political risk and uncertainty could chill investment across the sector. The new rules have left many reconsidering their long-term commitment to defense stocks. The $5 million CEO pay cap is a seismic shift for the defense industry. Median CEO pay at top contractors was $19 million. This order slashes it by over 70%. The administration argues that leading a government-dependent company is a form of public service, and pay should reflect that. Critics warn this could drive top talent to other industries, risking a brain drain. Defense CEOs manage massive, complex organizations. Lower pay may make these jobs less attractive. The long-term risk diminished leadership quality at companies critical to national security. Defense CEOs are well paid, but not outliers compared to other industries. The real controversy is how much profit is returned to shareholders. Economist William Lazanick found that companies like RTX paid out up to 250% of net income in dividends and buybacks over 5 years. Lockheed Martin, General Dynamics, and Northrop Grumman also returned more than the corporate average. This data fueled the administration's belief that shareholder enrichment was prioritized over reinvestment. Executives argue they can meet both investor and business needs, but the order challenges that balance. Recent earnings calls show companies were committed to dividends until the new rules arrived. The administration's stance: it's time to redirect those billions into capability, not cash payouts. The numbers became the backbone of the executive order's rationale. The executive order lands its hardest blow on the legacy defense giants, shaking the very foundations of their long-standing business models. Firms like Lockheed Martin and Northrop Grumman, built on decades of steady dividends and investor trust, now face an exodus of shareholders and a fundamental upheaval in how they operate. Their stocks, once a safe haven for pension funds and retirees seeking stability, may become increasingly volatile as traditional investors flee to safer ground, uncertain about the future. In contrast, newer tech-driven firms like Palantir and General Atomics, which prioritize reinvesting profits over paying out dividends, are largely insulated from the immediate impact of the order. This shift could accelerate the Pentagon's ongoing move toward Silicon Valley-style innovators, especially those leading the way in artificial intelligence, autonomous drones, and advanced cybersecurity. The order may unintentionally hand these agile, fast-growing newcomers a significant competitive edge, allowing them to capture new contracts and talent. The result is a dramatic rebalancing of power, as established giants scramble to adapt their strategies while new players rapidly gain ground and influence. The industry's future may ultimately belong to those already aligned with the order's priorities, firms that are nimble, tech-focused, and ready to innovate. The old guard faces a tough and uncertain pivot, while the new guard stands poised to benefit from a rapidly changing defense landscape. The ripple effects could be severe. Major contractors rely on thousands of smaller suppliers. If primes face cash flow pressure, that stress will cascade down the supply chain. Slower payments and tighter contract terms could drive small, innovative firms out of the defense market. This would weaken the industrial base the order aims to strengthen. Another risk: companies may become risk-averse, focusing on compliance over bold innovation. The defense industry's long cycles mean investment depends on predictable government demand, not just available cash. Without clear procurement plans, holding more cash won't guarantee new factories or breakthroughs. The order could inadvertently stifle the kind of risk-taking that leads to true technological advances. In trying to enforce accountability, the government may end up promoting mediocrity. The defense industry stands at a crossroads. Companies will lobby for clarity on performance metrics and seek to adapt their strategies. Firms reliant on dividends must pivot to emphasize long-term growth and reinvestment. The divide between legacy giants and tech-focused newcomers will likely widen. If established contractors can't adapt, they risk losing ground to more agile competitors. Congress may debate whether executive orders or legislative reforms are the best path forward. The ultimate test: will the order drive innovation and reliability, or stifle the industry and weaken the supply chain? The coming years will reveal whether this bold move reshapes the defense sector for the better, or leaves it struggling with unintended consequences. For now, the industry is navigating a new and uncertain battlefield, with the rules rewritten overnight.